Hello and welcome. This is Joseph Gillette. I wanted to go over some topics that are important to both founders and investors from the same perspective, and that is what investors look for in startups. When they're evaluating investments, they'll pass on very many in order to select that one that looks perfect to them. And so this is a message both to new investors and also to founders. What should you show investors that they're looking for? And this digs deep into what you're actually offering. In other words, this isn't how to write a good business plan or how to make a good presentation, but these are things you should actually be doing in your business, which are going to resonate well with investors. And the first one is scalability. Is your business scalable? So many businesses will start and you can make money and have some success, have some sales, have some revenue, but can you turn this into a huge business? So if you have a couple of employees, can you scale this where you have thousands of employees like a publicly traded company? Another thing that investors look for is, does this technology fundamentally change the industry that it's in? So for example, look at Uber. Uber is really just an app. It's not any technology per se. But if you go to New York City, you won't see any more taxi cabs. If you used to go to New York, you'd stay in a high floor, you'd look down, you'd see all these yellow cars. It was like a yellow ant's nest. Now you just see normal cars because it's all Uber. It's all just normal cars. There are still taxis, of course. In every city, there's still taxis, especially connected to airports. But basically, Uber changed the whole car ride concept of anybody can have an Uber, and it's kind of a well-managed app. Anybody can drive an Uber and anybody can hire an Uber. And we had a situation where I live in Knoxville. There was no electricity. I couldn't open my garage door and I needed to hire an Uber to take the kid to school. And it was funny because the guy said he was just swamped with calls because people's cars were either stuck in the snow or they wouldn't start or their garage doors were closed. So Uber is here filling a service. And I'm sure that the taxi cab industry would not have been able to, there's not so many taxi cabs for that rush of demand that we had during that snowstorm. So that's just one example. Uber is very scalable. And early on, I'm sure that the investors realized this is a scalable business. This can work for a small town or it can work for New York City or Los Angeles. The third thing in our list, and there's many more, but does the business plan include solutions how they are going to deal with big competitors? So let's say you have a great product. Let's say that you make a better computer. Your computer is faster, it's cheaper to manufacture than Dell and all the big brands. How are you going to compete with the big companies? Because the big companies have something that you don't, which is lots of capital. They have good reputation. They have a consumer base. So do you have a business plan that's going to address how you're going to compete with that? How are you going to compete with regulatory changes? So another thing that the big monopolies may do to you is regulate you out of business. What's your solution to that? And you may have thought of that. The founder may have a patent, for example, or some kind of exclusivity, or a way that they're going to partner with the monopolies in order to incentivize the monopolies to work with them rather than crush them. So there's a lot of solutions for that, but all those things have to be thought out because you can start out great, hit the ground running, things are going smoothly, you're off to the races, things are going well, and then all of a sudden the problems start. It happens to many startups and businesses. It's happened to a lot of great companies that would have otherwise been good companies, and they just didn't think about these important things. So does the business plan address how the company is going to manage risks such as regulatory risk, legal risk, competition risk, in the sense that there's going to be in any industry, you have an entrenched interest, whatever it may be, whether it's in fintech or consumer products or any industry, you're going to have an entrenched industry that's going to defend their interests. The establishment, meaning the existing companies that we use every day, are always going to try to defend their interests. They don't want to go out of business. So startups and founders have to figure out a way to either work with them or sell products to the establishment, to the existing businesses, or find a way to make their business better. So they're not competing with you, they're partnering with you. That's just some advice. And that's a way that many companies have succeeded in solving that problem. So these are, again, just a couple of ways, just a short video explaining some of the things that investors look at. But these are very important things. Basically, if you don't have these three things solved, they're going to look at other startups who have solved them. So you've got to tick these three important boxes and many other boxes. But if these three boxes are not ticked, they're probably going to pass and look for another investment. This is Joseph Gillette Sr. with Venture Capital Cross, and I look forward to seeing you guys in future videos. Have a great day.